GMGM, welcome to another Touchgrass podcast episode. Today we have Ayyan. All right, so for everyone listening in, I've tried to get this. I've tried to get him on when he was running his own company, when he got acquired, when he was at his new company, and then now when he's at something new entirely. So I've tried to make this happen. I don't know where the schedule is, Ayyan. There's no love for your boy, but finally made it happen.
Listen, man, all good things are worth waiting for. That's what I'll tell you,
They
Rashid.
are. They
There
are. All
we
right. Um, I want to say this on camera. Congratulations for the acquisition. Do you want to probably start there? Like, this is like three pods into one. To be honest, like we probably start there. You know, how was that experience?
Yeah, I mean, I guess like the progression itself is crazy from like then to now because a lot has happened. Right, just focusing on the acquisition sort of piece. Early 2025, I think the sort of perspective for privacy was not as well understood within the general crypto markets, but certain teams had a strong understanding for it. And I think we really see this now, given that we have so many institutions working to move on chain, that people are taking privacy very seriously. Like you have projects from a decentralized perspective like Umbra, you have projects like Zcash and whatnot that have done really well on the narrative that people really want to take this into strict consideration, especially as regulation and more laws come into place where people are concerned about like where is the cryptography component of crypto. So long story short, because Gateway is building out a encryption protocol focused on MPC technology, we wound up having conversations with Circle, and now everyone knows Circle is launching ArcChain, which is their layer one specifically tailored towards the financial markets, specifically with payments and FX networks. So for them, the idea of privacy and enabling that at the L1 level was very important. So I think that was just like a very timely sort of opportunity for us, for the team, for us to be able to go and work with a high caliber group to build something where privacy is like really important and at the centerpiece of what they're building.
What do you have any thoughts on like the privacy landscape right now?
I think that for the most part, the ones that succeed actually incorporate privacy directly into their network as opposed to making it a feature. I think the problem with people thinking about like payment networks and whatnot, like the idea of just blacking out a transaction or forcing someone to wrap a token and you send the token elsewhere and then having to resettle it on chain, you're still at the end of the day moving around capital and you're just obscuring the endpoints. I think if you're incorporating privacy directly into the L1, that actually allows you to do a bunch of different things where for FX markets, for market makers, for people that are moving large amounts of capital on chain becomes more important. So I think that there are networks that are working on it and thinking about it a lot. The one that executes on it from a network perspective while thinking about the applications wins, not the ones that are doing it at the application level and enable it as a feature.
Yeah, and one of those products, obviously, Arc, doing something very similar. Um, you ended up working at Circle for a bit, right? Like, how was that experience?
Listen, I know that I wasn't at Circle for a long time. I think that once we got acquired, we were brought in there. We brought in with a specific purpose, a specific focus. I think that they have some of the highest operators I have ever seen. Right, like the one thing that we can't take away from the largest institutions in space is that they have obviously the ability to bring in some high quality talent. I will give a shout out to some of the bright minds that I worked with, people like Sterling, who's leading a lot of like the BD or the actual development for the ecosystem for ArcChain, Matt Enslin, the CTO, CPO at Circle as well, with their sort of vision for how do you build this out properly. All these people there, I think, are certainly the right people to building Circle's L1.
Yeah. Did you spend time with Mr. Allaire at your time at
No,
Circle?
I did not spend time with Mr. Allaire, but I think the cool thing about Circle and the way that they operate, it's such a huge company, which I think like part of the reason why it was difficult for me to kind of find like my sort of love for the industry. Maybe it's really good for other types of people who are executors. Um, you have the opportunity to kind of like own your products and own your the thing that you're building out. So I think that is pretty cool.
Awesome. All right, let's get back to it. All right, talk to us about this founder mode journey. Like, how did this happen? You were at Circle. What were you doing? Like, how did you fall upon this? I feel like people like they have like theses in their mind. You probably have like a 4 or 5 year vision, and then
Mhm.
you're like, I want to go after this. And talk to us about that. Like, how did you think about it? How did this come up? All of it.
Yeah, I think you nailed it, right? It's like it depends on the individual. I think when I joined Circle, again, like I really like the people there. But for me, in terms of like the types of things that I think were still possible in crypto from like a 0 to 1 perspective and that they had not been achieved, I wanted to go and achieve those things. So for the longest time, especially even at my previous startup, I've always thought about RWAs as being like that next sort of opportunity for us to bring in high quality issuers and capital providers on chain. And I think we started seeing that early 2025. So I just genuinely became very interested on that sector. I think that also is a core thesis of any sort of institutional chain like ARC or like Plasma, et cetera, is like how do you get these sorts of assets into your network and become like prime components for composability. Um, Long story short, when I was there, I was doing a lot of research, met a lot of different teams, and Rockway just so happened to have acquired this licensed reinsurer based out of Bermuda that was trying to tokenize their reinsurance business, bring it on chain, and the entire team has experience building out the tech and insurance side of that industry, and they've been in the space for decades. And so what they needed was someone to help them actually lead that tokenization strategy, that DeFi strategy, et cetera. So I think it was a kind of a marriage of at a perfect time where I was really interested in learning more about those different types of assets. And obviously I've been very bullish Solana, been a Solana bull since below $10. So for me, I felt like this was a natural marriage of like my interests, my view of what the best blockchain arguably is in all of crypto, and also with an opportunity to bring unique yield to crypto, which we can obviously talk about.
Yeah, we can talk about the yield in a minute. I think, you know, as people who spend a lot of time in the industry, like why Solana is like a really intuitive question. Like when I joined Wormhole, like the fact that they were the first Solana to Ethereum bridge meant a lot to me, and a lot of what drove me to do stuff there. Um, let's answer the question, like why Solana. Like I'm pretty sure when the Rockaway X guys told you about this, it was pretty intuitive for you, but like for the person listening in who doesn't understand why Solana, like how do we tell them?
Yeah, I will explain this from a user perspective, right? And I will explain this as someone that's been using Solana's network for a great better part of like a few years now. The idea for me was the first time you ever made a transaction and aren't paying an arm and a leg in gas fees, and the first time you're making a transaction and don't have to wait a pretty significant amount of time for that transaction to land, your entire thesis around what's possible on chain changes. So I think that just from a user perspective, the infrastructure that is created within Solana, and there is relentless efforts to improve that with all the different clients with double zero. I think it's very, very impressive what the team is trying to do from a technical perspective. And I guess that's exactly what you have to do when you want to build the internet capital markets. The infrastructure needs to scale with the demand. So that to me as a user has always been super interesting. And that's why I think there's so many unique financial products that exist on Solana, that are harder to build on Ethereum.
Yeah, let's take this into the yield part.
Mhm.
um what like before this sort of popped up, you've obviously spent a lot of time in the industry. Do you have any thoughts on how yield has progressed in DeFi? And then we can talk about like how it's going future and how Onre will progress it. Like, but where do you think the state of yield is right now, and how do you think we've evolved over the years?
Little known fact, back in my anonymous Anon user days when I first got started in DeFi back in like late 2019, early 2020, I was an early non-technical contributor to Yearn Finance. So if you're asking me how I've seen yield evolve, see where I was then versus where I am today. Okay. So
Yeah,
we were at the cusp of the definition of fake internet money, the idea of being able to pile degenerate yields from one venue to another, creating sophisticated vaults for users to be able to interact with, to compound their returns on chain. I think that was like a really starry eyed moment. And to be honest, I don't think even with working at RE today, like that feeling as a DeFi user, as someone who appreciates what crypto has done, that feeling just hasn't been there as much. I think now it's also natural. And I think it's a good thing that I don't feel that, because now where we're at in terms of yield, we're seeing people trying to find more sustainable means of capital efficiency coming on. So now when people are talking about yield, I think Athena really unlocked the idea of like a yield bearing stablecoin and the concept of being able to recognize like basis trades, which is one of the oldest ways for hedge funds and stuff to make capital on centralized exchanges or on custodial platforms, etc. But then from there, it's like, okay, what's next? So we went from like fake internet money to now yield that's based upon market volatility and appetite and demand and market structure. And I think that really has been overblown now. Like everyone is trying to build something like that. And then the third view of like RWAs is naturally, how do you bring something that's completely unique on chain so that way you have a very valuable collateral asset that can be used efficiently across the markets. And to me, Onre is exactly that. And the evolution of yield today is that it is yield uncorrelated to crypto market structure, uncorrelated to the performance of equities, and uncorrelated to treasury rates, right? So it is operating in its own world. And the reason I say that is because insurance as a whole, as an industry, continues to scale irregardless of technical advancements or the appetite for people to be able to long or short Bitcoin.
Yeah. Can you talk a little bit about the type of yield on
Mhm.
Onre, and then we'll probably talk about like what you think the future of yield is. But let's start there. Like, what kind of yield can I get on Onre right now?
Yeah, so right now on Onre, you're roughly returning about 10%. The yield itself is coming directly from real world reinsurance premiums. So as a reinsurer, like what is reinsurance? Someone said it best on a previous like sort of podcast I was on, where it's like insurance, it's the insurance for the insurance industry. And the sense is like one large insurance company, let's say for example on $100 billion policy, let's say in Florida, they don't want to take in the entire risk from their balance sheet directly. So their thought process is going to be, okay, how can we diversify this and allow other people to share in on this insurance policy with us? So that's where they approach the reinsurance companies, either through brokers, through other sorts of capital partners. But the idea there is that we are those people that fill the rest of those insurance policies in. We typically try to underwrite $2.5 to $5 million per reinsurance deal. So the total exposure that we're getting can be upwards of like $40 billion or something like that on a reinsurance, depending on what we're underwriting, right? So we try to write like between 50% property catastrophe deals and 50% in specialty reinsurance. And the idea there is that we're currently always looking at like diversification in terms of the deal type, geography, line size, peril type, things like that. So our insurance team has decades of experience at doing that.
That makes sense. The first question that I have, having heard all of this, how hard was it to convince like a traditional insurance company to let an on-chain primitive have an allocation in that weird insurance policy? Like, I'm pretty sure that must have been a step forward as well for the team in terms of
Yeah.
how they were able to get that allocation as well.
Yeah, I think like, especially when the reinsurance space, when we first started going to the market, it was very difficult for the traditional insurance players to even wrap their head around the idea that, oh wait, what is this concept of stablecoin? What do you mean that you guys are holding USDC or USDG, USDT, etc.? So the idea of even stablecoins, funny enough, here on like Wall Street and the capital market, people actually understand stablecoins, are very aggressively trying to pursue it. The industry, the insurance industry moves a lot slower. So even now, the idea of like why we saw recently, you saw the announcement of Circle and Coinbase trying to like really work directly with Bermuda, is because they want to advance that as being a center for unique financial products to embrace stablecoins. So I think that the leaders in the industry are doing what they do best, which is leading. And so the education hopefully picks up. Right now, as a reinsurer, we typically underwrite against stablecoins, but most of the deals that we have written because of insurance companies' preferences is actually in paper treasuries. So we'll go ahead, take in the stablecoins, users receive ONYC, which tracks the performance of the reinsurance company's fund. And then from there, you essentially accrue yield based off of like the premiums that we generate. So we typically take the USDC or we'll convert it into like a paper treasury that's held at like a custodial bank.
That makes sense. And I'm gonna have our editor try to put together a flowchart. So we'll quote tweet this with a graphic as well. But talk to me about the other side. Like this type of opportunity has never been available on chain. how receptive were the Solana people to this? How receptive have users been? Is there a lot of user education required to explain it, or is it just like, hey, it's another source of yield, degen's aping in type stuff? Like, how has the user onboarding been for you? And we'll
Me,
talk about how the Solana team's been supportive as well.
yeah. So I guess let's just focus on like the yield understanding perspective. There will always just be users who are like, yield looks good, I'm aping, right? That's just generally you can't remove that. But I do believe that the markets are moving to a more sophisticated environment where a lot of people are asking us questions. So when we first got started, and especially in October when there was like significant unwinds in the market, you'll see Onre held up very, very well. And I think a lot of that has to do with the fact that we put out a lot of educational materials to explain to users that while yields are getting compressed on other venues that are dependent upon crypto market structure, we aren't. People are still seeing us generating upwards of 10%, around 13% or so at the time. And so users became more and more interested. And so at that time, we explained how we're uncorrelated. Where does the yield come from? Why is it important for us to be able to build a strategy on chain? And I think it gave a lot of users confidence. And I think the unique thing that we also did was is that as part of our RWA, because we put DeFi and because we put crypto market at the center of it, we keep 20% of the book liquid, and we utilize that to be able to stabilize secondary markets. So we ensure that like our RWA's price is always staying at least within a few a decent percentage or bips of the actual NAV on chain.
Can you talk a little bit more about how the secondary market functions here?
Yeah,
Um,
for sure. Yeah, on the secondary side, like it's interesting. What we have is we have around $10 million worth of liquidity across Orca and Radium. So users can easily purchase or sell on YC directly on chain. And then we also basically, in terms of minting that new on YC, you have to be KYB'd. And also, in order for you to be able to redeem on YC directly for, let's say, cash with us, you have to be KYB'd. So it's just like any other stable coin in that sense. But we make sure that we allow for there to be deep liquidity on the secondaries because we understand that there is a lot of activity that happens there. Users might want to be able to access capital quicker. They want to be able to move into borrow lend positions. So that's why we have so much liquidity in the secondary markets and expand and plan for that to expand over the next couple of months, increasing it progressively. And the other thing that we think about with the secondary markets is also prioritizing user experience. We don't want users to face high slippage or high issues when they're trying to make trades, or if they're looping, they don't want to open positions at losses.
Yeah, I think that's the first thing that traditional RWA protocols don't spend a lot of time thinking about. Like, hey, sure, this is real world assets on chain, but the people using it are DeFi users. They want liquidity. They want to be able to use it easily.
Yeah.
Talk to me about all the looping opportunities here. I know you guys wrote an article about this, but what's the looping thesis there?
Yeah, for me, I think especially with RWAs like Onre, I think there are other really quality projects that are building in the space. I'm really happy to see Prime launch as efficiently as they have. High quality opportunity for users to get access to a lending product that speaks for itself. But with Onre, the idea of like why it should be used as a collateral asset. My view is it is the best investment in a bear market because you're actually still returning yield, and then it's the best collateral asset in the bull market because you can basically go ahead, deposit on Camino, borrow another stable coin against it, knowing that your asset is still generating yield, and then go ahead and invest into risk on assets if you'd like, right? Depending on your appetite for risk. The view that I have here in terms of why looping is because it's the best form of capital efficiency when it comes to the opportunities of financial engineering on chain. So if you have an asset that's already generating underlying yield upwards of 10%, the idea here is that when you're borrowing capital against it, you can more efficiently get more yield for your initial dollar than you can by just simply holding it and not utilizing it, or maybe looking to sell it and get access to a higher risk asset. So my view in terms of what looping unlocks is greater capital efficiency, greater utility for users in terms of getting better exposure to an asset that they believe in, and being able to also increase our opportunities to work with better projects on chain. So, more and more yield, the higher yield returns are, the more capital flows in, the more opportunity we have to create a diversified, strong reinsurance book.
Yeah, and just for everyone, sort of TLDR, you can basically loop on Camino right now. with?
Yeah, you can loop on Camino and you can loop on Loop Scale. I think that depends on what your preferences are. I think one of the best markets to loop USDG is on Camino and on Carrot DeFi. And then if you're looking to loop USDC with on YSC, one of the best markets to do so is Loop Scale. So we try to also think a lot about like our positioning in terms of products to allow for the best experience. If you don't want them to overlap, you don't want to have like, people competing amongst different platforms, which they could naturally do. But if you are thinking about those things, maybe margin zero comes into play as an on-chain prime brokerage, and you can just, utilize your collateral across those networks.
Yeah, awesome. And talk to us. I know we skipped this question. How has support been from the Solana team?
Yeah, I think a big part for us as to why we came on is just the foundation is very, very much focusing on, this internet capital markets thesis, and a lot of it has to do with RWAs. I mean, I forget Onre. Just look at what they've been able to do in the past few months. Like they've been able to successfully onboard Maple's project. They've gotten Galaxy, Forward Industries, Superstay, all these teams to be able to help start tokenizing various assets directly on chain. They've also gotten Ondo to help tokenize like 200 plus stocks and other assets. They have had Figure with their democratized HELOC product, bringing that on chain, and now it's the largest market on Camino. Like, this is not a narrative anymore. I think it's reality catching up with us to see that markets appreciate the efficiency of the network. So Foundation has done a really good job on the BD side on supporting teams and getting like a very strong cluster of high quality asset issuers on chain. And I think a lot of the kudos has to go to like people like Ramsey and stuff at the foundation who lead those efforts.
Yeah. In terms of talking about like institutional adoption on Solana or maybe in crypto in general, I think we're heading towards this phase where DeFi and TradFi converge, and this this beautiful architecture of having reinsurance on chain, but then also being able to loop it. I think it's like the prime example of this convergence.
Yeah.
Where do you think we go from here? Like, what are the institutions looking for? What happens next on chain?
Yeah, it's a really good question because I think that if you would have asked me if I imagined JP Morgan tokenizing a CLO happening on Solana in 2026, I would have said that's not happening. But the fact that they've worked with the right sort of partners to be able to do that, it speaks volumes. I think that the biggest thing that we're probably going to see in the next few years is more high quality issuers moving on chain, and more teams start to appreciate the need for them to not just tokenize an asset, but actually build a strong DeFi strategy around it. Because I think that Henri wouldn't have been as successful if we had only tokenized the asset and not thought about the actual DeFi markets and strategy from the get-go. And I think that's why Prime has been successful. And, you see a lot of other RWAs tokenized, but they don't see the same level of traction. So that sort of focus, understanding, and making sure that you're positioning the asset not just legally correct, but strategically correct is very important.
Yeah, that makes a lot of sense. This has been awesome. I know we're closing up on time. I just have a few more questions.
Yeah.
Can you talk to me a little bit about, what happens next? All right, like we have a reinsurance protocol. People are using it. What can people expect? Like, what's the future here?
Yeah, my thought process is that Henri needs to consistently grow and become a billion-dollar protocol on chain that is continuing to reinsure real world policies. I think our goal in terms of what it looks like is that we also want to start being able to generate revenues, because when it comes to reinsurance space, one of the biggest reasons people are excited about this, especially the capital providers we talk to, is naturally one of the highest revenue generating businesses. Right, in terms of capital efficiency, it's nearly 40 times more effective from a capital return perspective than tokenized T-bills or repo markets and stuff like that. So I think once we get to that point of having a fully diversified book, turning on that fee switch and being able to generate strong cash flows, and then utilizing that to continue to grow our DeFi markets, to support our users, support yet new products that really change the way that you leverage a yield-bearing RWA on chain, I think that becomes very exciting. And then, obviously on the traditional side, getting rated, being able to work with some of the top reinsurance businesses in the world, being able to actually push net new capital providers into our balance sheet. That's all what the goal looks like long term.
Awesome. I'm just gonna clip farm you right now. Can you tell me what the number one thing you'd ask someone who's listening to do on Onre today?
Number one thing I'd ask someone to do on Onre.
Yeah.
I think the number one thing that anyone should do with Onre is understand the risks that comes with DeFi markets and like generally appreciate what it means to be able to take an asset like Onre's that's generating yield in the real world and bringing that on chain and then effectively utilizing it across a unique ecosystem of applications. So my view is that people should consider the looping thesis that we've talked so much about, because I think it's a most efficient way for capital to be reutilized in the space, and it allows for people to be able to get increased exposure to some of their favorite projects. So I am not saying that you should go and loop on any project. I am saying that if you are a user and you think that you understand the DeFi markets, there's no better way for you to increase your exposure to one of the best forms of uncorrelated yield in crypto.
Would you also say that's advice for someone, like anyone who's trying to understand RWAs on chain? That's how they should go about it, like understand the underlying asset and then understand what you can do with it on chain?
100%, because I think that we're no longer in the state where we were like a few years ago, where no, you can't. If someone can't ask you where does the yield come from, then the asset itself is something that you should not consider. We are very transparent. I would like to say that we have led transparency and set a new standard for transparency for RWAs.
You want to talk a little bit more about that? Like, what does transparency mean?
100%. Like, we do not hide, for example, the types of reinsurance policies that we're underwriting. We don't hide the types of premiums that we expect to generate. We do not hide, for example, the collateral assets that we're holding to stabilize or provide secondary market liquidity. We are also doing attestations with Apex, which is the same service provider that does so for like Coinbase. So we're using the top institutional platforms to help users understand how our capital is being allocated and whether or not it's truthfully being held. So I think these are all the things that we're doing to make DeFi just a better industry as a whole. The more information, the more ability for you to verify data points, the more stronger your asset becomes.
And all of this you can go to the website and sort of read about, and users are able to see transparently.
Yes, our transparency dashboard is live. You have a lot of the information already there. We have our attestations linked at the bottom. And in the next few weeks, we're excited. We're already signed on with them. We'll be integrating Accountable, which I think has become like the new standard for any yield-bearing token to be able to show verifications on chain. So I'm excited to have the combination of a Accountable and an Apex as we continue to build.
Awesome. I think that pretty much covers it. I think the last question that everyone must have is, where can we get that quarter zip?
This QZ is limited access only, and the only person outside of Onre's team that's getting one is Ratchet.
All right, there, you heard it. All right, I'll give away one to anyone who's listening in and clips on to infinity. All right.
There you go.
Cool, Ayyan. Thanks so much for coming on, man. Finally, we're obviously gonna have you on again. We'll do an IRL thing pretty much soon. Thanks so much for coming on, man.
Yeah, man. I think at the next break point or whatever, we can plan to meet
Break
up.
point's too far, dude. I need to get you on like in a couple of months. We'll talk about RWAs and we'll rip it again.
All right, fine. Let's set a target for then. If Onre needs to be in 3 to 4 months above 150 million in AUM, then we can do another podcast. Otherwise, I'm not allowed to show my face on YouTube.
I've been trying to get you on for so long. Like I'd love to do one every day with you, but all right, we'll set that target.
We'll set a target. We got to hold ourselves accountable.
All right. See you then.